At the end of the day, 517.87%. That's going to absolutely smoke what you're making. What is going on? It's Ryan here, CEO and head quant at happytrader.io. Today, we're going to be going over how to boost your retirement portfolio. So this is going to be an interesting video that's going to show you how to take just a small portion of your overall savings or portfolio, actively trade, or maybe automatically trade, depending on how you want to do it, and end up with that little bit of cash compounding and doing really well, complementing very nicely to your normal SPY or S&P 500 or Vanguard oriented retirement fund. So I want to preface this video by saying that first, this is not financial advice. This is for educational purposes only. We're going to be looking at leveraged instruments here. And the first thing I really want to get into is bringing up a visualization over time. Let's just go ahead and use since 2010 to 2024. Seems like a fine benchmark, no problem. So what we're going to do is we're going to be using the MES as a comparison. So the first thing we want to do is look at the overnight margin, 1364. So we want to take that and put that into the initial amount under portfoliovisualizer.com, which is the best backtester for baskets of equities. So really nice to be able to do. You can include the year to date. That's what we're going to do in our backtest. And we can do a year-to-year backtest using the strategy tester using happytrader.io. So going to give you a little bit of context there. So we're going to use the same starting amounts for both and rebalance annually. We don't need to do any of that. We're not going to use any leverage. We're just literally going to add SPY as our ticker, right? So it's going to be the Spider S&P 500 ETF Trust. And we're going to go ahead and just type that into asset number 1. And in portfolio 1, we're going to do 100%. All right. So that's going to be that. We're just going to hit analyze. We should get a graph. You can see the annualized return here for just buy and hold of SPY. That's how much, right? So what we're going to do is look at the actual chart of growth. Hey, what happened over those years, right? Okay, so SPY, you can see that December 31st, 2014 is where we're starting. Okay, so that's where this data goes back to. And you can see that, we've made an okay gain, right? So we can go to annual returns and we can see, portfolio has matched the market because it is the market essentially, right? You can see the trailing returns. You can see the holdings, it's all SPY. Really easy, and you can see the return and you can see the risk. So you can see that we've maybe doubled the money in, let's say, 10 years, right? So that gives you an idea, kind of what's going on. You can look at all types of things on Portfolio Visualizer, but at the end of the day, we really care about how much money is in our account when we invest, right? So over a period of time, this is a little bit of money. Yes, this will compound and grow into even more money. But I'm going to show you this compared to, I'm going to leave this chart up here, but we're going to start at the same date. So December 31st, 2014, and we're going to bring up our strategy tester, and we're going to do 2014, 12/31, and we're going to do year to date. So we're going to bring this all the way to July 3rd. We're going to bring this all the way to 2024, 07, 03, right? So today's date. Now, what do we want to do? We want to set the exact same starting capital. So 1364. We're going to hit over to the properties tab and set our capital here. We're only going to be using one single contract. We're only going to have that $1,300, right? That's what we're going to start with as our margin. We'll see what happens. If we have to pad the account, if it draws down, that's okay. We're taking this trade expecting maybe a drawdown. So that's something we're going to, take into account. Okay, so the next thing we want to do is head back over to TradingView, and we want to select the MES. That's what we're going to be using, which correlates with the SPY, but it's leveraged. It's the futures. But It's the micro futures. It only trades at 1/10 the size, and you can see that reflected right here at 1/10 the size. So 1364 can be our beginning balance. We're going to set 1364 as our starting balance. One contract, no pyramiding. We have our same date range set. Okay, so we're just going to make sure everything's good here. Looking good, no problem. One thing we really want to make sure we're doing when we set up these backtests is make sure that we have these little arrows with our backtest up. We can hide it real quick and you can see they go away. But we trade off of our uptrend and downtrend signals. These are not tradable signals because you'll get absolutely smoked taking these signals because you get the signal, but the market's already moved in the opposite direction. So we trade off of our proprietary uptrend and downtrend signals, and that's how we're going to overlay. And you can see that it overlays a buy AI and a close AI there. So the next thing we're going to do is just triple check everything, make sure it's good, and then generate the report. And you can see here that we have our report. We have our report here. We're going to stretch the report out because you really need to see the difference. So again, let's go back to buy and hold since 2014. And you can see that our graph looks really good. We're much better than 200% or so that we had in that period. Now, here's where I'm going to throw you a little bit. This is actually a shorter time frame. And the reason why is because the micros were released in 2019. So let's go back and sweeten up the deal a little bit. So we're going to change our time frame from 5/14/2019 over here. Let's go ahead and do that. And we're going to do settings, and we're going to just double check it. So we're just going to set month to month. We're going to set May, and we're just going to run the entire month of May. Okay. And actually, you know what? Let's really make this scientific. We're going to push this to June, and we're going to push this one to June as well, just to really give you a good eyeball on this. So we're going to do 2019-06, and let's generate that report. And there's our report. And we're going to pull this report now. So analyze portfolio, and you can see a little bit better of a gain. Okay, that's awesome on Portfolio Visualizer. You know, wonderful, right? And this just goes to show market cycles. The longer you are in the market, you're going to endure a lot more of these big super cycles and swings because you can see almost comparable performance, right? And even a little bit better performance in some cases, which seems to be the case here. But at the end of the day, we waited from 2019 to 2024, and we've literally made like 2x, right? That's a long time to wait to go from $1,300 to $2,600 or almost $2,700, right? Not to mention the percent return is very low on a yearly rate. Now, if we go over to our backtester, you can see here that we are using, let's be fully transparent here, we're using a swing trading time frame. All you have to do is go into Happy Trader, add the alert. You're going to get the alerts on your phone. You can get them on a webhook. If you're a quant, you can get a pop-up. You can get the app when you get these uptrend and downtrend signals. All you have to do is get Happy Trader, add it to your alerts, and that's it, right? So let's go back to the strategy tester, and let's blow this thing back up. You can see 359 total closed trades. This is with active management. Now you can do this automated. You can do this manually, whatever you prefer to do. But some of these trades are going to be overnight. Automating is going to give you the full expectancy. Something you need to be aware of is that this is a lot of trades to actively manage. Another thing you need to be aware of is the max drawdown here when we're using leverage. Risk reward, high correlation, anything in life. In stock market and especially leverage instruments, no exception to the rule. And you can see here we get off to a little bit of a rocky start. So we put in that same initial balance, right, that 1,300. And look, it went all the way down to 1,000, went all the way down to, what, like 1078. So we would have had a little margin call there, maybe padded the account with another 1,000. Or we could have delta hedged, like I talk about if you subscribe to the channel, the hedging techniques. And the hedging technique would be as followed for this particular trade. You can take one MES long, and then you can go short simultaneously a NASDAQ, an NQ, an MNQ to be specific. Or you can do it the other way around. If you're trading larger size, you could go the full ES long, and you could go up to 10 MES contracts short. And as that ES starts to get above water and you start to get your signals, From Happy Trader, you can start to pull off those hedges. And if you read, double dip down, put the hedge back on, protect yourself from not knowing if you're entering here, here, or wherever, here or here, right? You don't know where that drawdown is going to occur. But at the end of the day, 517.87%, that's going to absolutely smoke what you're making. And this is using a very small percentage. So same amount of money, exactly the same, right? All we're doing is actively trading over a span of many years, 300 trades actively that are buzzing on your phone, and they're swing trades, so you're really not having to sit there and look at the market. And instead of making 26.97, you're making 7,063. Now do the compounding math on that, pull up ChatGPT or something, and you'll see why Happy Trader continues to be the best indicator that you can get on TradingView. I hope that this was quite the eye opener for you as far as what Happy Trader can do for your retirement. This is Ryan from Happy Trader, CEO and head quant. I hope you enjoyed this video, and I hope it was an eye opener and informative for you to supercharge your retirement fund. Have a great day and happy trading.